Is volatility risk for investors? That's our question for today's video. And with the markets all over the place as they have been for the last few weeks, we ask, what does that volatility mean for investors and what can you do about it? Let's get into it. If you've been following the stock market for any length of time over the last few months, you've seen a large amount of volatility. From the recent peak in the beginning of January 2022 for the S&P 500, the index plummeted 9.8% through the end of January, just barely avoiding a 10% drop that would have signaled a technical market correction. And since then, the index surged by 6.1% in just a few trading sessions before falling another 2.3% a few sessions after that. So what does this kind of volatility mean for investors? Does it bring in more risk into your investments? Well, when I consider something like risk, I like to look at the returns involved as well, as they go hand in hand with each other. If the return on investment is high, the risk is almost certainly going to be high as well. And if the return is low on investment, the risk is likely to be low as well. Everyone wants the high return, low risk investment, which is basically the get rich quick scheme, but it doesn't exist. If you want a deeper dive into the relationship between risk and return, check out our video we did on that for our classroom series. And with that in mind, the volatility we've seen lately has introduced a lot of risk in the short term. There's been potential for high return if you timed your trades perfectly, which isn't possible, but there's been a lot of risk as the indexes took big dives in a very short amount of time. The big question is, what do you do about it? The answer to this will depend a lot on what kind of investor you are. Are you the short-term risk taker with money you can afford to lose? Or are you the long-term investor that wants lower risk because you're dealing with your life savings that you'll need for buying a house, retirement, a wedding, or other large expense? The two big factors there are your investment timeline, short-term or long-term, and then your risk appetite. That's going to determine what you might want to invest in and how. We also did a video that deals with short-term versus long-term, so check that out as well if you want a deeper dive into that subject. Now, since we're talking about the stock market, let's consider that specifically. For the short-term investor that doesn't mind a lot of risk and has money they can afford to lose, you have the potential for high returns in times of volatility, but it comes with high risk as well. You could lose some serious capital trying to time these markets perfectly. The one thing I can say to you is this: good luck. For the long-term investor who may be a bit more risk averse and wants to protect their investment, try not to worry about the short-term volatility. Since you're in it for the long term, you're going to be able to ride out these ups and downs. If you're not sure whether it's a good move to put any new money into the markets at any given time, you can use a strategy called dollar cost averaging. The idea is that you have a set amount that you'll invest regularly over the long run. For example, maybe you want to put 5% of your paycheck into the market each month. Some months you might buy some stock and it goes down, and some months you might buy some stock and it goes up. But over the long run, these short ups and downs won't matter as much because the long run trend to the major stock market indexes historically has been up. Just look at this graph of the S&P 500 over the last century. No doubt about it, the default direction of this index is up. If you're investing in individual stocks, you could see very different returns. But on average, the stock market trends higher over time. And with all that being said, I do need to throw in my usual disclaimer that I am not a certified financial advisor. This video is not financial advice, and you are responsible for your own financial decisions. But I do hope this video has helped answer any questions that you may have had on this topic. And if there was something you wanted me to go into more in depth, or if I didn't cover some aspect of this, go ahead and leave it in the comment section down below. If you liked the video, please give it a thumbs up to support the channel and help us grow so more people can see content like this. And don't forget to subscribe to our channel, hit that notification bell down below so you know right away when our next video comes out. We cover a lot of topics related to economics and investing, like real estate and inflation. So make sure to check out our other content as well. Thanks for stopping by. I'll see you in the next video.